Welcome. You're watching Q3 results on NDTV Profit, and we're talking about Arvind. Arvind's Q3 has been fairly decent, at least on the EBITDA and margin front. On the top line, revenues have slid slightly at 1,888 crores versus 1,979 crores. This is consolidated year on year, but net profits are up about 8.5%. Margins up 200 pips. Or so to speak. Punit Lalbhai is with us now. He is ED and VC of Arvind. Mr. Lalbhai, thank you so much for speaking with us here at NDTV Profit. Let's begin by understanding the quarter. Your woven garments have done well, your AMD has done well, but your denim segment, I think, has slid. Do you think that's what's resulted in what we're seeing in terms of revenues?
So in terms of revenues, I think the volumes are up everywhere except denim. It's a raw material price and deflation that has led to the muted sort of revenue number. Denim in Q3 is always muted. It's a seasonality in the business that makes every Q3 slightly lower. So overall, I would say that on volume growth, we are pretty much on target. It's been a raw material price that has led to the deflation in top line. And it's been some good hard work and efforts to expand the margins on the bottom line.
Okay. Just to follow up there, why would you say that Q3 is seasonally weak for denim? Do you see that sort of dissipating and changing dramatically in Q4?
Yes. So Q3 is always a low quarter because it's a change of the season. It's spring, summer. Denim is a heavy product, so it's not bought and sold during the Q3 period. So that's a regular seasonality. You always have a Q3 that is slightly lower in terms of volume in denim. Okay. It's an industry trend more than anything else.
All right. So you're saying you see that changing in Q4?
Yes, Q4 should be better volumes on denim.
Okay. If I also look at some of the breakup, your export volumes have been good, up 19%, but your domestic volumes seem fairly muted year on year. What do you put that down to? Are you seeing that as a result of lower demand, lower consumption in which segments? Can you break that up for us?
So the absolute value segment in the domestic market ever since COVID has not been doing as well. We put it down to actual sort of lower disposable income. I think in India, the high value segment, 1,000 rupees and above, is doing fairly okay. The exports present a good opportunity for us right now, and that is more what is leading to the export versus domestic ratio more than anything to do with something wrong in the domestic market.
Okay, fair enough. But if you're saying that at the lower end, that is rupees 1,000 and below, you're still not seeing a recovery to, say, pre-COVID demands, what is the trajectory that you're viewing there?
So we are not expecting a dramatic change in the short term. I think this soft market has been with us for the last few quarters, and we see it continuing for the next couple of quarters at least. But I think there is ample opportunity globally and in India for individual companies to still post good results.
All right. Let's talk a bit more about the export market, because that's one space, Mr. Lalbhai, that has done well for you. Are you seeing a more robust trajectory on export volumes? What is your outlook? What would you guide for in terms of export volumes? And which markets do you see giving you the largest quantums of business?
See, overall, for the last 4 or 5 quarters, ever since the Ukraine conflict started, we've been seeing a very weak environment globally in textiles. We've been seeing massive inventory pileups with the buyers. Now, the good news is that most of those inventory pileups have been worked through, and we are seeing a slow, yet not insignificant increase in demand. And we should see subsequent quarters improve in terms of demand, especially on exports.
So you expect exports to improve. Do you expect the domestic demand also to improve? And can you give us some color on your AMD segment, which seems to be doing well? What can you add there?
AMD is a very different competitive landscape compared to conventional fashion textiles. We have been growing this business quite aggressively over the last couple of years, and we are very excited. It comprises of three segments: human protection, industrial fabrics, and composites. All three are very large opportunities, and we have the visibility in this market, in these segments, to grow at this 20% for the medium term. So we're quite excited about how that market and how that product category is shaping up for us.
So how much do you expect it to grow in terms of contribution to your revenue? How big are you betting on AMD?
So it's taking a good share of our investment budget. It's currently at around 20% of the overall business, and we expect it to grow faster than the conventional textiles business. So in the medium term, it should be a much larger part of the overall business.
You don't put a ballpark number to that when you say larger part of the overall business?
Well, it's a mathematical calculation. If we grow that at 20%, and if the overall business is growing more like 10%, it will gain that mathematical market share as we go forward.
Okay, so the bet is on AMD. Let me just come for a second to your margins. And you mentioned in the beginning of our conversation, Mr. Lalbhai, how a lot of innovation and work has gone into improving those margins. What exactly, in your view, did the trick? And do you expect that margin improvement to continue as a trend in Q4 and the next financial year?
As far as AMD is concerned, the margins have improved because of better operating leverage. As the business grows, our fixed costs are getting amortized. And also we are entering into better product mix. So AMD margins are expanding because of these two factors. On the textile side, we've sort of consolidated the business under one leadership. We call it the One Arvind initiative, where all textiles is under one unified leadership, whereas earlier we used to have denim, wovens, garments managed by separate teams. That One Arvind positioning has driven a lot of efficiency unlock. It has driven a lot of cost reductions, and it has also positioned us better with our customers. And that is the primary reason behind the textile margins improving.
One last comment from you, Mr. Lalbhai, and I want to know about how the Red Sea disruptions are impacting in terms of increased freight rates. Are you seeing any pain point on that front?
So I think there's reasonable amount of pain globally. The good news for us is that a lot of our contracts are FOB contracts. So beyond the disruptions in Q3, which there were a few, around when the event actually happened, we see this getting factored going forward into the planning cycle of our customers. And we don't expect large negatives because of this issue. Of course, for our customers, their logistics cost has gone up, but it has gone up uniformly for everybody. So to that extent, it is not something that is causing disproportionate worry.
So not causing disproportionate worry at this point. Thank you so much, Punit Lalbhai, for speaking with us today. That's the management of Arvind, talking about the quarter gone by and how they expect the seasonal sort of overhang on the denim segment to reverse in Q4 and further.